Good morning, fellow traders, and welcome to today's live trading session. As you guys know, today is Wednesday, September 13th, 2023, and we do have some important data coming out real soon. I'll have Marvin touch on that briefly before that data comes out. And as a matter of fact, that could be the reason why we don't see too many opportunities in the market right now, mainly due to that important data coming out in a few minutes, really about 30 minutes from now. But yeah, good morning, everyone. Good morning, Little Boots. Yeah, it says starting right as the national anthem ended on the radio. Yep. So yeah, good morning, Naomi. So yeah, good morning, good day to those who are in attendance. I know we do have some that's overseas, so good day to you as well. But with that said, what we can do is start tackling these markets and look to see if we can find some setups in the market. So the first setup I want to talk about is the Euro Aussie, and we're currently looking at the 1 hour time frame. And as you can see, we're currently in a bullish environment. We can see here that price is making, higher high, higher low, higher high, that type of setup. So we're in a bullish environment. However, we have to be extra careful because of the nature of this pullback and because of what we're testing. If you look to the left, you can see all this structure to the left. Look to the left, structure leaves clues. We have this area of resistance or supply right in this area. So this whole area is an area that we need to be concerned with, and that's the reason why price reacted to this zone of supply. So, even though we're bullish, we still need to be cautious because there's a likelihood that we could see price push up into this zone and then collapse from there. So then what we want to do for this particular trade, we're going to simply wait for price to do something like this. We're going to simply wait for price to push up to the upside and break this zone to the upside. We want to see a break and clear of this zone to the upside, and then from there we could look for a pullback and then a buy. So we need to see price break this zone. That's what we need to see. And if you really want to make sure you're on the right side of the market, you would say, hey, let's make this whole zone from the lows right here all the way up to the highs right here. So then, in other words, if you want to really play it safe, you'll wait for price to break this whole entire zone and then look for the retest and then look for the buy. So then that's what we'll be looking for Euro Aussie. Right now we'll be in wait and see mode, and really it's like that for most of the pairs.
Talking about Euro Yen.
Euro Yen. Actually, I don't know. The reason why I said that pair is because that's another pair on my radar. But anyways, Euro Yen. So we'll just sit on our hands and wait for that to happen before we decide to execute a trade in the market. And I think the CPI announcement, which is going to come out real soon, has a lot to do with how price is currently moving right now. So then I think a lot of traders are waiting on the sidelines for that. So, but yeah, this is something that we're looking forward to on the Euro Yen. This break to the upside and this pullback and this retest of this area of resistance, which will then become support if this does happen. So that's what we're waiting on right now for this particular pair. But I think Marvin has something he may want to share.
Yeah, I just kind of want to briefly mention how like Euro Yen could just be one of the yen crosses that, to be honest with you, we should expect to continue to trade higher. And the reason for that is because what we see happening with oil prices and what we see happening with the Japanese yen and its relationship and its tie to oil. Whenever oil prices rally, that's always translated as yen weakness, since Japan is an oil importer. They don't produce any oil. They don't drill any oil. So then if the price of crude is increasing, then that means that the Japanese economy, since they're not an oil producer, they're going to have to actually spend a lot more. So then typically, so then that actually helps to boost inflation in the Japanese economy. So then that's one relationship and correlation that you need to know. Whenever there's an uptick in oil, it's always translated as yen weakness. It benefits the US dollar, but it translates as weakness for the Japanese yen. So then there could be a plethora of yen crosses that you can look to buy. So even as you look at euro yen, look across the other yen crosses as well. Look at Aussie yen, Swiss franc yen, just other yen pairs to see, are we seeing that bullish sentiment in today's session? Are we seeing that upward momentum and those opportunities to buy the yen crosses, which would mean to sell the Japanese yen? So I just kind of wanted to briefly mention that, and we'll touch on that a little bit also when we go to the fundamental analysis part or macroeconomic part.
Yeah, so then, all right, this is euro yen. This is what we're anticipating. However, bear in mind, we're at this area of resistance and we can literally see price collapse, just like we saw every other time price hit the zone. But all right, since we don't have any questions, I don't think we have any questions, then we can definitely move forward. But yeah, good day, Bridget. Thanks for coming. It's always good to see you come into the room and join us. But all right, so yeah, with that said, we can move forward. Let's do one more yen pair. Let's do the Kiwi yen, because what you'll find out is that they're all kind of in a similar state to some degree. So we're going to go to the Kiwi yen, and we're on the 1 hour chart. Yeah, we're on the 1 hour chart, and really this was a good pullback opportunity right here. However, we do see something similar to what we see with the euro yen. We have some issues mainly due to the fact that we're encountering this area of supply right here. And just like what we had before in this area where we were waiting for price to break and close above this zone, pull back, and then buy, we're sort of waiting for the same thing because this area has been held for a long time. You could look historically and you can see that on multiple occasions, this area acted as an area of resistance or supply. So, of course, we want to respect this area. We know that, hey, there's a possibility that we could see price react from this level and push lower. So then in the same way, what we're going to do, we're going to look for pretty much the same thing. As a matter of fact, I could move this over right here and say, hey, this is what we're looking for. We're looking for something very similar to what we saw before, where we're looking for price to break and clear this zone to the upside, look for a retest, and then look for a buy. In other words, a break, pull back, and a retest of the zone. Just going to bring this all over because this is what we were looking for even days ago. This type of play, you could say. So yeah, let me delete this right here. But yeah, so then of course, we have a bullish bias on the 1 hour, although we're still testing this area supply, and it's really been neutral. It's really been in a range, you could say, a range, but price has been making higher lows. If you draw out a trend line, you can see it clearly. Price has been making higher lows, which could give you some level of maybe confidence that we could see price expand higher, expand to the upside. We don't need this anymore right here. So let's get rid of this. All right. So yeah, this is another opportunity that we're waiting for. We're just going to simply wait for price to break out and then pull back for the retest and then look for a buy. And you never know, this could happen upon the CPI announcement. Who knows what will happen? I know most assets get affected whenever the US CPI numbers come out, and whenever those inflation numbers or that inflation data comes out. So you just gotta sit on our hands for now. If I was you, I wouldn't do anything because that's a very important announcement and it can determine how price may move for the next few weeks especially for the remainder of this week. But, it's a very, very important data release coming out in about 18 minutes from now, you could say. All right. So are there any questions with the Kiwi yen going once, going twice? If not, then we can go to the next asset, which is Euro Aussie. So let me just hurry up and do that as well. Euro Aussie. Yep. And for the Euro Aussie, we're looking for a buy. You can see that price is pushing right now to the upside. We have this pullback. Price is pushing up. And, that's exactly what we want to see is this move to the upside. So, we probably could be in the middle of this trade, but really we should have been in it by now. Actually, we could have actually been in this trade. But let's see how things look on a 15-minute. Okay, so yeah, this is the 15-minute. Price is trying to break and close above this level right here. So yeah, it's up to you how you decide to trade it. It would have been good if we would have gotten in a little bit early. But yeah, we may not have a decent opportunity now to get back in. It would have been great if we would have gotten in around this area right here when this candle closed. But as you can see, price is now pushing up. So we may miss out on our opportunity. We're in this bullish environment. However, just like with most assets, you have to pay attention to supply and demand. And right now, if you go to the 4-hour chart, you can see that price is somehow heading towards an area of supply, right around here. This area of 4-hour supply. So, of course, if we don't get in, then I'm okay. I'm okay with that because we are at this area of supply, and it seems like price could potentially rotate soon. And if you jump in now, you'll probably get a few pips if you do jump in now. But it definitely would have been better if we would have gotten in right here, right when we had this 1 hour higher close candle. That would have been better if we would have gotten in at least right around there, and then we could have traded up maybe to these highs, whatever. But of course, it is what it is. We may have missed out on this opportunity. So if we don't get this opportunity, it's fine. It's okay. But I'm just going to keep this here just to see how things go. And, we'll see what happens. I know if you want to, well, if I want to, I can probably jump in on my personal account and just have a wider stop. But, and risk small. But, yeah, we'll see. We'll see. But, yeah, I'm expecting price to at least test these highs. And then from there, we may see a rejection, just like we did all the other times we see these nice rejections from this zone. So, yeah. But, yeah, we may have missed out on this opportunity. All right, let me do one more, and let me hand the mic over to Marvin before that announcement comes out. And hopefully this doesn't move. It's probably moving also. Who knows? But the Aussie Kiwi, we're currently looking for an opportunity to short Aussie Kiwi because we have this environment. It's a bearish environment to the downside. We can clearly see it because price broke and closed below this low right here where this wick is. It closed below it. Therefore, we need to only look for sales in this case. So right now we're waiting for price to pull back and correct. So where could price correct to? Well, it's pretty simple. We have a few locations, but before we do that, let's see how the 4 hours looking. Okay, the 4 hour is looking like this, but really it looks like it's almost in a range bound price action type. It's pretty much range bound. It's pretty much trapped in a range for at least 2 weeks. So yeah, but anyways, let me do this before I move on. Let me make sure I identify these areas of potential demand right here. So we have 4-hour demand right around there. But yeah, what we're looking for an opportunity to get up a little bit higher. Looking for an opportunity to sell. Yeah, let me do one more thing right here. So then price is testing this trend line right here. So we could see price push up from here. But anyways, let me go back to the 1 hour. And let me just point out that, hey, we're in a bearish environment. We should look for an opportunity to sell. Where do you think the sellers will come in at? Well, look historically. Sellers came in at this area right here. We see sellers come in at. You see sellers came in right around here, which is the same area. Same exact area right around here. So this is where we're going to look for sellers to come in at. So again, let's just draw out the zone. We have our area of supply right around here. And what we're going to do is look for price to correct up into this zone and then look for an opportunity to short upon bearish confirmation though. And then we can maybe target the lows or even shoot for extended targets like this 4-hour demand right here. But yeah, this is what we're expecting for Aussie Kiwi. Yeah. Now, yeah, I just kind of wanted to jump in to touch on just the Aussie Kiwi real quickly, because really both of these currencies on an individual like perspective or basis, like we separate it from its pairing, both currencies are selling off. And they're selling off for a reason, simply because they're the weakest currencies for today. They're lagging all the other currencies since the broader global market is pricing in slower growth. And, I don't want to load you guys with too much, macroeconomics, but you guys know that the Aussie and the Kiwi, or the Aussie and the New Zealand dollar, are commodity linked currencies. They're commodity based. Australia is known as a mining economy. New Zealand is known as more of your softer commodities dealing with agriculture. And what we've been noticing is that the higher energy prices, what we see happening with oil for the past few trading sessions, since oil is trading at 10-month highs right now, that is weighing on productivity. That is weighing on the possibility of whether or not we'll see production manufacturing keep up at the pace that it needs to sustain growth. So then we're seeing that filter through or pass through even in the Aussie and Kiwi for today's session. But yeah, I know, Melvin, like, I don't know if you're done. I know we got to talk about today's inflation report.
Yeah, that's what I was going to tell you to do. You have about 9 minutes before that report comes out.
Yeah. So then for most of this week, and we talked about it on Monday, we talked about how really most investors were waiting for the US CPI report, the consumer price index, or the market's preferred inflation gauge. Now, this is not the Fed's preferred inflation gauge, but this is the broader market, broader economist inflation gauge, since pretty much it just, the reason why the Fed does not really look at CPI, like they look at CPI data, but they don't focus on it to really help determine their monetary policy decisions, even though that I'm kind of saying that wrong, but they don't really prioritize it above the PCE data, which is also an inflation gauge. But the CPI is pretty much your metropolitan areas. It's only localized to a 100-mile radius around your major metropolitan cities. So then that's going to come out in a few minutes, and we're going to touch on that in a little bit. But first, before I move away from the chart, what I want to do, we want to look at how the dollar is trading at the moment. So we're going to look at the Dixie real quick and see what's happening with the Dixie. And as you can see, the Dixie is sort of moving to the upside. If we go to the daily chart,
you could see that the market is pricing in a higher dollar. So could that be that the market is pricing in that the Fed is probably going to have to hike rates because the numbers, today's CPI numbers, are either going to come out pretty strong, pretty firm, and if that's the case, then the market could be front running with dollar strength for today's session. So then, like, there's a lot that I want to cover. But so then what I'm going to do right now, we're going to go to our economic docket. That's what we're going to do right now. We're going to move from the screen and we're going to go to today's economic docket. And this is not coming up. Let me see. Yeah, okay then. It's not.
You gotta.
Yeah, I know. Yeah, I'm doing it right now. Okay, here we go. Okay, so then, yeah, we're here at this web browser. So then what I'm going to do, I'm going to go to one of the economic calendars, Daily FX. We're going to look at their calendar to sort of go over today's CPI print, because markets are sort of, investors are sort of sitting on a sideline waiting for these prints to come out. So for today, we have inflation rate, core inflation rate. You can see that these are high tier data prints. And as you can see, the headline number we're expecting, or the economists are expecting it to actually pick up and tick up higher, from 3.2% last month to 3.6%. So in the headline figure, which includes food and energy, we're expecting to see inflation pick up. However, on the core side, which takes out food and energy, it prices out the volatile impact of food and energy. You can see that on a year-over-year basis, that it's expected to sort of slow down or soften from 4.7% last month to 4.3% last month. So traditionally, when you look, and we can see the same thing even for the month to month. We see month to month headline inflation expected to tick up at a faster pace at 0.6% month over month. And we also see the same, where we see for the core monthly measure, you can see that it's sort of the same 0.2% increase month over month. So it's sort of stagnant on a month to month basis for the core. But traditionally, markets would more so focus on the core, since food and energy is pretty volatile. They're seasonal components and they tend to move up and down rapidly all the time. And we need more consistent data to sort of rely on the headline figure. However, this headline figure is troubling because what it's saying is, are we seeing an uptick in food prices and energy prices? Are the cost of food getting, increasing? Right now, we talked about it earlier, we're seeing the price of oil rally to the upside as we see these oil production cuts begin to work their way into each day in the economy. You saw the Saudi Arabia is going to cut by 1 million barrels per day. Russia is going to cut their oil production and also cut oil shipments by 300 barrels per day. So then we're seeing this rally in crude oil prices, which is inflationary. That actually helps stoke inflation. So there's some concern regarding that. And that's the reason why we see for the session, let me just go to financial visualization so that we can see the futures heat map. We can see for today, the futures heat map shows a mixed bias. There's some instruments that are selling off, and there's some instruments that are sort of hanging on to whatever gains they can. But in a general sense, there's more instruments or asset classes that are trading in negative territory, trading neutral in negative territory. And that's because of what we see happening with oil prices. As oil prices continue to increase, that's going to put pressure on stock markets, simply because that, rising oil prices is inflationary, and it can indicate that central banks around the world may have to hike interest rates more to help pretty much quell inflation or cool down, the rising, surging prices of goods and services. So then, yeah, we see this heat map. You can see that the VIX is sort of cooling down, or is sort of toning down, pulling back, which could be a good sign. It could be that before the Wall Street open, we're seeing this positive move come into the market, as maybe traders, investors, analysts start discovering that, maybe the CPI numbers isn't something we need to worry about. Maybe, this could be a non-event, and we can just look forward to trading based on what we see technically, and based on, just the whole ideal of the possible stock in a stop in interest rate hikes. So yeah, so then pretty much we got the CPI data coming out. We got 3 minutes for it to come out. We want to primarily focus on really the month to month, because we want to see the pace of how fast inflation is either accelerating or decelerating. So we want to look at that, even though they have this as medium, this is still important, but also the year over year. And we see that right now, even with the forecast of 3.6% year over year for the headline inflation, that's still nowhere near the Fed's preferred inflation target of 2% inflation. So then that's the reason why the Fed is hiking rates. They're hiking interest rates to bring this number down to 2%. They want to bring both the core and the year over year headline inflation figure down close to its 2% gauge, or 2% range. So then they're going to keep conditions tight. They're going to keep monetary conditions tight, liquidity tight to some degree, until we see this inflation number pull back. And so then that's pretty much what many traders are looking for. But let's go back to the chart. Let's go back and let's see how the market responds to this CPI data, which is going to be coming out in a little bit. So then let me go to the 1 minute chart. And we see, for some reason, we're seeing a pricing down. We're seeing this move ahead of the announcement. This move lower. This could be a sell the rumor, buy the news, which is buy the rumor, sell the news in reverse. So the market is selling the dollar into the CPI print in order to actually buy at a lower price, at a more discount price, and maybe shoot upward. But we're going to give it a few more seconds. It should be coming out in a few more seconds. Yeah, I apologize for rushing through it. There's actually a lot more that I wanted to touch on, because even with the Cleveland Fed inflation nowcast, they actually priced in higher inflation, higher than the BLS figure. Okay, so then it came out. Inflation numbers are out. We see the dollar is picking up. As you see how it's getting strong, the dollar is being bought. This is the Dixie, the US dollar index, and it's going up. So that must mean that the numbers, the report, that the Bureau of Labor Statistics, look how look how strong this is. So let me just do this real quick. Let's go to the calendar. Let's see what these numbers came out as. Okay, let me just see if I can refresh this. Should be. Okay. For some reason, this is not coming up. Okay, let me just pull up another. Let me pull up another calendar. For some reason, that is not coming up. Okay, so we see here that the core, well, the CPI, of course, it increased at a pace of 0.6% for the headline, which was already priced in, but it actually came in much hotter. Look at this. It was supposed to take up to 3.6%, but you can see here how this number came in at 3.7%. It actually overshot the economists' expectations. And we can sort of, of course, the core sort of stood the same. So then that's just letting us know that inflation is really localized to food and energy. What we're seeing is we're seeing higher oil prices, higher energy prices, maintaining sticky inflation. Inflation is remaining sticky as a result of it. I want to see if this is going to come up, because it's much easier to see. Okay, yeah, so you guys see inflation right here, 3.7%. That's the headline figure. So instead of it moving lower, closer to 2%, it actually moved higher. It moved higher than the forecast, and even higher than the previous month. So that means that inflation is pretty entrenched and sticky, especially in energy prices and food prices. So then that's the reason why we see the dollar rallying to the upside. Let's just go back to our screen, our chart, and look at the dollar. we saw the dollar initially have this knee-jerk response to the upside on the likelihood that the Fed is going to actually have to remain more hawkish. They're going to actually have to continue to keep rates higher for longer to sort of offshoot or counter the effects of inflation. But as you can see right now, it popped up and it's getting ready to pair some of these gains here. Some of the gains, it's getting ready to slide lower. So we see this knee-jerk response to the upside, and it seems as if right now it wants to reverse and maybe possibly retrace most of this this move, because even though it did overshoot the forecast of 3%, even though the headline figure came in at 3.7%, it's only 10 basis points higher than 3.6% inflation. It's only like 0.1% higher. So then that's not too much of a difference or too much of a variance or, a difference. So then we see this could possibly be a non-event where we saw this volatility kick in. We saw this initial batch of traders buy, and then they sold. They took profit, and now we're seeing the US dollar possibly weaken and slide lower. But this could also be due to more that's written within that report, because we don't have time, because we're on this webinar, I haven't read through the report. But yeah, so then for those of you guys that are new, I also want to let you guys know, you guys do not have to know this stuff to be good traders or know the details surrounding inflation. And, it's good to understand how inflation impacts prices, but to be honest with you, you don't need a PhD in economics to trade. You can still be an effective trader by looking at price action, because the chart tells you how the market is viewing this inflation print.
Yeah, but one thing I want to say as a new trader, it's also important to know when these important announcements come out and to wait. And don't assume just because you see that initial spike and move, that price is going to go in that direction. And that's what hurts a lot of traders. They see that strong reaction, and then they get caught in on the wrong side of that move. Right now, we don't know where price is going to go. It can go up or it can go down, but we have to give it some time to figure out, to let the market figure out where they want to push the dollar. So then that's why patience is so important, and discipline. So then during this time, we're patient. If you were on a 1 minute chart, you would easily get tricked into jumping in, and plus with the way the bias was on the daily and all those higher time frames, you would immediately jump in. But of course, it's always good just to be patient and just wait for more clarity. Wait at least 10 minutes after the announcement, at least, especially for something like this. I would say even wait longer, but at least 10 to 15 minutes before you decide to execute.
Yeah, for all the noise to leave the market and for the market to determine a clear bias or a clear direction on how they want to trade the dollar for the rest of today's session. So then sometimes we give about 10 minutes plus, maybe even more depending on how the market is moving. But we see what's interesting. We saw that knee-jerk response higher in the dollar, but now we're seeing that it's immediately sold lower, and it seems like it wants to break the low of this previous pre-announcement consolidation that was forming ahead of the announcement. So then let me go to the daily candlestick, because I think we're still positive for today, but it's just moving lower. So then we're still positive, or there's still a positive bias on the dollar for today, but it looks close to making its way towards its opening range, its opening price down here, if it continues to sell off for the rest of the session.
Yeah. And what I want to say is that technically that could be something that we could have expected anyways. Because if you go down to the 4-hour chart, we know this is a correction on the daily. You go down to the 4-hour chart, it needs to create that leg C. So then we have a leg A.
Yeah, I guess you could touch on this right now.
Yeah. I don't know if you were finished with your fundamental stuff, if you wanted to do the fin viz and all that stuff. But yeah, anyways, yeah. So then we have, what you have here. You have your leg, A, and then your leg B, and then we need to see a leg C expansion lower. And that could be what price is trying to do before it bounces up higher. So then that's the reason why, yes, you look at the you look at the fundamentals, but if you can have fundamentals and the technicals agree, that's even better. And this is the reason why, we say be patient when these announcements come out, because maybe price wants to get down to a technical level where they know buyers are before they push price up, so then you know, like that's the reason why you should be more skillful on the technical side than the fundamental side. But yeah, we could be seeing that. We could be seeing price giving us that 3-wave correction, leg A, leg B, leg C, before we see price actually push up and before we see the dollar strengthen. So then that's something that we definitely have to bear in mind whenever we do look at these announcements. We have to bear in mind what's happening technically as well. So with that said, yeah, I don't know, Marv, you wanted to say anything? If not, then I can come. Did you want to finish what you were explaining earlier, or did you? Because you can if you want.
Well, yeah, yeah, I can just briefly go back. We could probably just cover FinViz or even talk about oil. Let's just look at oil real quick. I'm just going to do this US oil. It is the WTI crude. This is Western Texas oil. But you can see how oil has been trading, moving to the upside. It's at 10-month highs.
Oh, wait, well, yeah, never mind. Because I was going to say, even after that announcement like that, it's good to see what your prior setups are doing, because you may have to abort those ideas or keep them, or they could be going in line with your idea.
Okay, so then I guess we can go to Euro Yen,
Yeah,
the
so
first one.
Euro Yen. Because if the dollar's selling off, you may see risk appetite.
Okay, and then we're going to go to the 1 hour, right?
Yeah, and we can see that price is making its way up.
So yeah, that's kind of what we want to see. We want to see this break to the upside and pull back.
Yep. But for all we know, price could respect the zone and head lower. So then we just want to wait and see what happens. But the Kiwi Yen was one. I think the Kiwi Yen was one. Let's see how that's looking. Yep, same thing, hitting that same zone of supply.
Yeah, we want to see it break and close above and then pull back to buy.
Yeah.
And then
we was a Euro Aussie.
Okay, yeah, that would have hit the take profit if we would have got in early.
Well, yeah, it would have definitely hit it. Probably hit it earlier, but yeah, this zone of supplies right there anyway. So then, if you didn't get in, then that's fine. But yeah, it did hit the target. We would have had like a 1.5 R on that one. But let's do Aussie Kiwi and see how that's looking. Yep. Okay. Aussie Kiwi is pushing lower, which is fine. We're still waiting for that correction to take place.
Yeah, that correction higher.
Yeah. So if it closes like this, then we have a new area of supply, right where that hesitation candle is.
Yeah, right where this is right here. This would be our brand new area of supply. If it closes down below this descending trend line, then this would be the area that we have to pay attention to first. And then after that, if it continues to plow higher, then we pay attention to this area of 1 hour supply as well. So yeah, I guess we're still waiting. We're waiting for these setups to form. These are 1 hour setups, day trading setups, but you could probably find something much quicker on a 15-minute chart or 5-minute chart if you're looking to scalp during the session. But yeah, so
because this may be a 15-minute, like go to the 15-minute chart, because we may, if it closes like this, we may want to well, never mind.
Yeah.
Never mind. All right.
Yeah. So yeah, let me go back to US oil real quick, because I just want to touch on that and how, for the past, really few weeks we've been getting, well, just, really days, we've been getting news about, oil markets, how there's going to be these voluntary oil production cuts that are happening. And I know OPEC just released a report, I think either last night or 2 days ago, stating that for the past year, or really 3 years, they've sort of overshot their oil production by 3 times. So then they need to sort of cut and do these aggressive voluntary cuts. So then, of course, it's OPEC. They're going to always release a report that benefits them and helps to make them more money. There's there's sort of like that I wouldn't say a conflict of interest, but of course they have much to gain from delivering a report that actually helps to underpin oil prices. But yeah, from that report helped to add another second wind or another tailwind to the oil rally, along with last week's news of Saudi Arabia and Russia oil production cuts by 1 million barrels per day. And this has caused energy prices to rally to the upside. But was it going to rally anyways? Is the question. Was it going to eventually move higher as we see these issues of liquidity, stimulus, excess cash floating in the market still persisted in the U.S. economy? So then, yeah, so this is pretty much what's weighing on markets, is what's really driving the yen and the U.S. dollar, I should say. The U.S. dollar was rallying at one point before the inflation data, since the U.S. economy is a major oil producer. We drill oil and we also export. We're a major chief oil exporter. So whenever oil prices go up, at some point, technically, at some point, the U.S. dollar should go up as well. And also, since the U.S. dollar and Canadian economies are linked together versus trade. They're linked together simply because that Canada is our northern neighbor. When we see oil prices rally to the upside, that typically boosts the Canadian dollar. And by way of that relationship between Canada and US, the US dollar tends to benefit from a stronger Canadian dollar as well. So then we see, oil prices moving up. This is inflationary. So then how are treasury yields moving at the moment? Our expectations of interest rates. So then let's see here what's going to happen. Our US 2-year yields, this is on the shorter end of the curve, and we did see US 2-year yield spike higher upon that announcement, but we see it pulling back, which means that markets are sort of toning down rate hike expectations at the moment. It's as if they're saying, well, we know the Fed has communicated through multiple Fed members that they're not planning on hiking rates anytime soon or hiking rates any longer. So most of the Fed members feel there's really no need to hike interest rates further, simply because we still have a backlog and a line and a list of rate hikes done over the past year that have yet to work their way through the U.S. economy. So then why hike rates without really testing and seeing and waiting and seeing what those rate hikes do to inflation, due to pricing pressures? Yeah, I know we have a few, you know, indicators, but yeah. So this is 2-year yield. It's sliding lower, but what do we see on the longer end, or more of our 10-year benchmark, 10-year bond yield, and we see 10-year yields sort of stabilizing, which could be a good thing, but also a bad thing, because what this could simply mean, interesting, that the market is sort of pricing in some level of growth, on the latter end of the yield curve. So yeah, but we see the 10-year yield is sort of holding on and hanging in there. So yeah, let's go to FinViz real quick, and then let's finish off with the fundamental analysis part. Let's go right here. This is our futures heat map. Let me go to the Forex side so we can get an idea of what the currency market is doing. And as you can see, the currency market, we have the yen is the weakest currency for today, just like what I talked about earlier. The yen is definitely suffering due to higher energy prices, higher oil prices. So then that's selling off. But following that is the Aussie, which could also be a sign that there's still some deterioration of pressure coming out of China. For those of you guys that don't know, the Australian dollar, the Australian economy is strongly tied to China's economy. They're strong trading partners. So you can trade Chinese data by using the Aussie as a proxy for Chinese economic data. So then the Aussie could be selling off due to that, or due to what's happening with iron ore and base metal prices, which, we'll look at once we get back to the charts. But the Aussie is the weakest currency right now. They, just switched. The Japanese yen is second, and then the Swiss franc is also weak, which, these two, Japanese yen and Swiss franc, are considered traditional haven currencies. Not so much the Swiss franc like it used to be, but in some way in our minds, we still look at the Swiss franc as a currency that's tied to gold, and that will always be considered a safe haven in a sense. So these three currencies are the weakest, and the three strongest currencies right now are the US dollar, which is still fairly neutral, but it's the stronger among the other, G8 or the major currencies. The US dollar is the strongest, followed by the Kiwi, the New Zealand dollar, and then the Canadian dollar or the loonie. These are the stronger currencies for today. So then there could be signs of some risk appetite, possibly, but you can see here that really the heat map shows a more neutral bias among currencies. So then let's go to the cryptocurrency space, which has been interesting. The cryptocurrency space, of course, a few days ago we saw it selling off, but also it's been rallying as well. We see Bitcoin moving upside. It seems like the digital space is trying to rebuild on its luster again and trying to rebuild its appeal to move higher. So then for today, we have Litecoin is the leading digital coin for today, followed by Bitcoin Cash and Bitcoin. And then the US dollar, of course, is the weaker in the digital space. And then Ripple, as well. So then Ripple is trying to really gain, like they really suffered for the past few weeks, but they're really trying to regain and move and gain traction to the upside. So let's see how this plays out over the next few weeks. But yeah, that's pretty much it. I guess what I'm going to do, I'm going to turn the mic back over to Melvin. He's going to continue to do some technical analysis, and we can probably close out the session with some technical analysis. So let's see. All right, guys. So yeah, we're just going to go over a few things just to give you guys an idea of what may potentially happen. But all right. So yeah, the first one I want to look at right now is a pretty simple one. Well, yeah, I'll explain more later. But yeah, let's go to the Kiwi cat, and let's start with the daily chart, and we'll work our way back down. So let's go to NZD CAD. All right, so right here, what we can see is that price has been consolidating for a while in this zone right here of weekly or monthly demand or support. It's been consolidating, which is what we expected. But from here we can see that price created this double bottom, and it may be wise and smart to look for an opportunity to buy, which is something that we actually did. But anyways, going to the 4-hour chart right here, we can see that price was overextended. We see this sideways price action with these candles, so then there's an opportunity to take advantage of a buy. Yeah, we're currently already in a buy right now, but yeah, for the most part, and this is only in my personal account. This isn't in like the funded account because I'm testing something out. But yeah, so then right here on the 1-hour chart, we do see price create this double bottom. So if price does break and close above this level, then we can expect maybe a pullback in price. So again, let's draw this out. So then we do have this right here, and in actuality is our trade is a little bit lower than this one right here. We entered somewhere right around 79, right around 80. This is where we actually entered in, right around here. A little bit lower than that. And right. Yep, right around there. But yeah, anyways, yeah, moving forward. So if this closes like this, then we can see another opportunity to enter a buy on a pullback in price. So again, we'll wait. We have about 8 minutes before the hour candle closes. We'll just simply wait for a pullback. What we can clearly see that we have a lot of demand in this area. We have this nice huge wick that was just created from that CPI announcement.
But what we would typically do is just simply wait for price to pull back. Now, price could extend higher. And how far could it extend? Well, let me show you. There's a tool called the fib extension tool. You can just take it from the low all the way up to the neckline, all the way back up to the high. And really in this whole area is where we could see price potentially go. So this is our potential area of reversal right around here where this box is. Let me change the color to yellow. But yeah, anywhere within this zone is where we can see price start that 1 hour retracement. So that's what we're going to be on the lookout for. We're going to be on the lookout for a pullback in price, maybe to this area of hesitation or area of demand right here. But that's what we're going to look for. We're going to look for that pullback to take place on this particular chart. But again, we'll look for price to correct down to an area of support or structure. And then we'll look for an opportunity to buy. So somewhere right around here, we look for an opportunity to buy on bullish confirmation. So yeah, we'll be waiting for this pullback to happen. But yeah, this is the Kiwi CAD. This is what we're looking for. And we'll see. We'll see how price pulls back. But we'll be looking to buy. And we can trade it all the way up maybe to the 141 or 161.8, all the way up there. But yeah, so then yeah, that's what we're looking for on Kiwi CAD. So let's see how this candle closes. We have about 6 minutes before that candle closes, and that can give us an idea of what we may want to do moving forward. So yeah, nothing's guaranteed yet. We don't even know if we're going to really buy yet. We need to see how this candle closes before we draw that conclusion. So I'll come back to this, but yeah, this is the Kiwi CAD, and this is on the 1 hour chart. If price closes above this neckline with a bullish candle, we'll be waiting for that pullback to take place. All right. So yeah, are there any questions before we move on? Going once, going twice. All right. So yeah, let's do one more. Let's do Euro Kiwi, and I'm going to start on the weekly for that one. So let's do Euro Kiwi, and then I'll get to the Nasdaq and the Dow in a little bit. I'm just going to try to get through this as quickly as I can. So then let's go to Euro Kiwi. All right. So yeah, this is the 1 hour chart of Euro Kiwi, and what we can see is that price is in the middle of this pullback phase. Let me delete some of this stuff right here. So it's in the middle of a correction, and we have an area of support or demand right around here. And it would be great if we could get a nice, retracement into this zone or area. But yeah, this is where we're expecting buyers to come in at on this weekly time frame, somewhere around this zone right here. Now, if you go down to the daily chart, what we want to see is a 3-wave correction on the daily, like a leg A, a leg B, and a leg C. And do we see that? Yeah, we do see that. We see a leg A, leg B, and a leg C. And right now, price could be pushing to the upside. We do have this ascending trend line resistance, you could say, right around here. We do have this ascending trend line resistance. Right here. So, of course, we see this here, and what we can assume is that until price breaks this trend line, we're not 100% certain that we're going to see a bullish continuation. We could see a deeper push into this daily or weekly zone of support or demand. So that's just something to bear in mind. But what we're going to do is go down to a smaller time frame, because right around here is where we could expect maybe some type of reversal on a smaller time frame. We can see price double bottom here. Let's see if we can get some movement to the upside. So right now we're going to go to the 4-hour. And what do we see on the 4-hour? Well, we do see what appears to be a reversal. Let me remove this. We see price consolidate, sort of creating like an inverted head and shoulders type setup where you have, well, it's not really inverted head and shoulders, but you guys get the point. We do see what appears to be a break to the upside of this area of consolidation, and now we're in the middle of this pullback. So what we're going to do is look for an opportunity to buy Euro Kiwi, and hopefully we can get an expansion above this trend line. So let's see. So then before we do anything, we first have to see and look at the fact that, hey, this is a 4-hour pullback. So then how do we trade 4-hour pullbacks? Well, right here on the 1-hour, what we typically want to see is what? On a 4-hour pullback, what do you typically want to see on the 1-hour? What type of pullback should we see on the 1-hour? And I know we go over this stuff over and over again, but it's important. On a 4-hour pullback, 4-hour correction, what type of pullback do we typically want to see? Yeah. Well, of course, a 3-wave correction, right? So going back up to the 1-hour, do we see that yet? No. We need to see leg A, leg B is forming, and well, leg B may have formed, and we're in the middle of potentially forming a leg C. So then as soon as we see that, then we can look for an opportunity to buy. So that's what we'll look for on this pair. But we have to bear in mind that we do have some internal supply on the 4-hour. So this zone right here is 4-hour internal supply. So we have to be a little bit careful. The best way to play this is to really wait for something like this, to wait for price to really break this trend line and break this internal supply zone, look for the pullback, and then get in that way. That would be the best way to play Euro Kiwi for now, because right now there's no guarantees. There's no guarantees that we're going to see price even break this trend line. It's been respected for a while now. So that's the safest way to play this. It's just to really wait. There's no rush. Wait for price to clear the zone. But if you do want to enter in immediately, you can. Just know that there's no guarantee you're going to get an expansion through this area. But yeah, I guess that's it. Now, I guess we can close out for now. I guess that's good enough. We may talk about the NASDAQ and the Dow later on, maybe in a private war room session. I'll let you guys know. But yeah, that's pretty much it. I hope you guys got something from today's session. Thank you guys so much for coming. And as we always say, remember to always count your blessings, not your pips. And we'll definitely talk to you soon. Stay blessed, stay encouraged. And yeah, we'll see you guys. We'll see you guys soon. All right. Have a wonderful, wonderful rest of your day. All right. Talk to you later. All right. Bye.